Okay, good day. Just want to thank you. Good day. Thank you for another interesting section on tripling, that is double, triple your profit in real estate. Okay, how can you, as a real estate person, okay, how can you, if you're going into real estate, okay, let's say you're ready to go, you want to buy property, you've got the finance, okay, now what can you do to triple your profit? It's either you triple your profit or you remain on a normal profit, or you don't make no profit, then you go out of business, okay? All right, let's work on the assumption that you've got your money, you've got sight on your property. The most important thing now in tripling your profit is knowing your markets. Okay. If you don't know your market, when I mean know your market, if you don't get the right market, three things can happen. It's either you lost, you gain, or you triple your gain. It's either you completely lost, or you do not. Okay, it's either you lost, you do not lost, or you gain. Okay, and the point you don't want to be, you don't want to be in someone who's got into real estate and lost a lot of money. You don't want that. Okay, that's where a lot of people find themselves, and they come out and say the real estate business is so bad. You don't want to you don't just want to be in the business. You just manage to break even. You put in £1 million and you're just managing to get £1,000 or $1,000 or 100. No, you want to be in the place where you're making profits. Okay, everyone goes into business with the intention of making profit. Okay, so what you really want is you want to triple your profit. You want to make more money from your real estate, especially if you're in the short term. Okay, the short term where you basically want to make something. Okay, you want to triple that profit. What you need to know is your market is very, very important. Let me give you an example. Okay, I'm mostly based in London and Nigeria, and one thing I know is when you go to a market where people need property, you understand? There's a high demand for property, and that is the market you should go, where people want to rent your property. If you have £1 million, or let's say £1 million or $1 million, and you want to build a property or buy property, don't go and buy a property in a place where there is no market. That is the worst decision to make. Make sure that where you are buying that property is in a place where someone is ready to rent your property or buy your property. Let's say you go to some remote village where, let's say, for argument's sake, the population is 100 and the amount of houses in that village is about 250. If you go there to buy property or you go there to rent a property, there's a strong probability that no one wants your property. So you could take £1 million, dollars, or naira to that market. What happened? You invest the money and the money sits there because no one is going to rent your property immediately. No one is going to buy your property immediately. Your property is just going to sit there. So that is actually taking a liquid cash, locking it somewhere and not making no profit. Now, if you've borrowed that money and you're paying interest on that money, and you don't have a tenant or buyer for that property, then you are losing money. That is the first place people find themselves. They lost money. Another one is just going to a market where you're not making profit, you're not losing, you're just managing to break even. Why are you doing the business? Okay, if I take 100 naira or pounds or dollars and I put in a business, all I get, it does not move, it's 100, I can just put my money in the bank. At least in the bank, I could get 1% interest. I could get even 0.5% interest. It depends on the interest rate, okay? Sometimes the economy is getting better, so I could even get more interest in putting my money in the bank, in some ISA, some fixed deposits, or investing it in some fund or somewhere where I'm guaranteed a 7% return, average 7% returns on that money, rather than put it somewhere where the money is not growing, it's not decreasing. But remember, the money is just there. It's just there. That is a place we don't want to be. So we don't want to be in a place where we're losing money. We don't want to be in a place where we're making no money. Where we want to be is in a place where we're making money, tripling our money, doubling our profit. That is the place we want to be in. That's why I said your market is very important. So we want to be in a place where people need our property. As a real estate developer, remember, the first thing is going to a market where the demand for property is. Okay, you're going to go to an area where you have the possibility of people coming to buy your property or rent your property. So before you get involved with buying that property, carry out a feasibility report, like carry out a research to know that there's a demand for that type of property in that area. Okay, if you have a property, let's say in London, or let's say Peckham, or around somewhere around London, there's a possibility that you're going to get tenants. There's a possibility that people want to buy that property. That is a high market area. Okay, so if you're somebody who quickly want to invest money and make money or survive on that money and make interest, so it's good to understand that wherever you're going to put your property is a place where there's a market for that property. Okay, let me give you an example. I could spend £1 million. You could spend £1 million. You could go somewhere, you buy 2 houses for £1 million. Okay, those 2 houses, you probably get tenant of £1,000. Sometimes you get, sometimes you don't get. At most, you can be making £2,000 every month. 2 times 12, that is £24,000. And it's not even guaranteed because sometimes you might not have the tenant. £24,000. I could bring my £1 million and buy one property, because the properties are more expensive in the area with good markets. I could buy one property. But that my one property, I could rent it for £6,000 or even £5,000. And that £5,000 is guaranteed because there's a lot of people that want property. So 5 times 12, that is £60,000. So guarantee I'm making £60,000 from one valuable property in London, while you have 2, not unvaluable, but 2 properties that are not as valuable as mine. You're making £24,000. That is not even guaranteed. So if you do the mathematics, I'm probably £36 better than you in a year. So I've actually doubled your profit, even up to the tune of tripling it. So it makes a lot of sense to understand that your market is very, very important. So before you invest in real estate, try to take a close look. Carry out your feasibility study, do your research to make sure you are investing in an area where there is demand for that property. Okay, on this note, I really thank you. So remember again, in recap, always invest in a market where people want properties. Okay? There's no need putting it where people don't want your properties because no one is going to buy, no one is going to rent. Invest in a market where people want properties, then you will realize that you're going to triple your profits. I've tried this, okay? I've tried this. I've invested in areas where people want property, and all the time there's always tenant in my property. Okay, I've invested in places where people want to buy all the time. I'm able to sell my properties. But if I put those properties in area where no one want to rent, I will have no tenant in my property. No one want to buy. I will have no one buy my property. So basically, what that means is that my property is going to be tied down underground, and the worst thing is tying capital, especially when it's not a long-term project. So remember that you need a market that can take you far. Okay, you've been watching this video on behalf of realestateninja.com. It's an online platform for tenants, landlord, real estate developers, and property buyers. Everyone come together. I hope this really helps you. And remember, on a very, very serious note, always understand your market before you go into it. And when I mean understand your market, I mean go into a market where there's a demand for your property. Otherwise, you're just going to be losing. Thank you very much.